Good morning once again. My name is Emmanuel Zapasi. I'm the Audit and Advisory Manager at Chartered Accountants. I would like to welcome you to our webinar today. Thank you for participating. Then a few housekeeping issues. We're going to record this session, and we are also going to distribute the recording as well as the slides that are going to be used for this session. I would like to introduce our speaker today, who is our Managing Director. So I will hand over to you, Ellis.
Thank you very much, Emmanuel. Please confirm if you can see me and also if you can hear me clearly.
Yeah, we can see you, hear you, Ellie.
Okay, thank you very much. I would like to welcome everyone on this. For me, it's a very important conversation that we're having on sustainability. Sustainability is no longer a fringe topic, but I think it has become very critical to everything that we are doing because of the different risks that we are facing, ranging from climate change and all the different types of risks. So it's no longer a topic which is an option for us in our different workplaces, but it's become very, very critical. I think that's why even from a standard setting board, sustainability is being accelerated and a lot is happening so that we begin to attune ourselves to that sort of new reality that we are living in. The world has changed. A lot of things are happening, and it's important that as entities and organizations, we are also responding to the changes around us. So I'd like to welcome you to this webinar where we're going to be talking everything sustainability, and I hope you benefit immensely from this conversation. So I'm just going to start and share my slides. Okay, right. Hope you guys can see my screen. Right. So the way I would like to start this presentation, it's not going to be very long, but the way I would like to start it is obviously to start by, because you can't start with sustainability reporting without understanding where the journey starts, because nothing ever starts at reporting stage. We all need to circle back a little bit earlier. So initially, so that you've got a complete understanding of where this is coming from. I'm going to start this presentation by just talking initially about sustainable development. Then I'll link it to sustainability reporting so that we've got a full appreciation of why this is becoming very important and very critical, and how you can obviously position yourselves in this regard. So number one, so we're going to define what is sustainable development and also sustainability reporting. We talk about what are some of the key drivers of sustainability and sustainability reporting, and then we're going to look at the frameworks, which is IFRS S1 and IFRS S2. Now, one of the things that we intentionally did was also to invite people that are by and large in the public sector, and some of whom might be applying IFRS.
Yes, don't have it.
The expectation, the reason why we do this is that I don't think you can sit and say, currently we don't have a standard on sustainability, so we're not going to touch it. The IFRS is working to release a sustainability standard in the shortest time possible. So that is definitely coming. But it's also important that you realize what's happening in IFRS is obviously going to have an impact on IFRS. So it's important that you already go ahead in the conversation instead of waiting for that to happen. So we believe that this discussion we're having is going to benefit immensely both those, whether you're on IFRS or we're on IFRS, it's a relevant conversation. And it's important that you already get started in this journey as soon as possible. Right. So when you're talking about sustainability, or when you're talking about sustainable development, which is a very important topic globally. So we're talking about that it's talking about the ability to meet the needs of the present. without compromising the ability of future generation to meet their own needs. So as we develop, as we advance, as we do all kinds of things that we're doing, there is a threat that we can do it in such a way that we are disadvantaging future generations from being able to meet their own needs. So this talks to we can do in such a way that we are plundering our resources, we are destroying the environment, we are destroying a lot of things in the process of wealth, in the process of development, and then in that effect, it then affects the future generation. So sustainable development about let's do it in such a way that preserves the environment and the societies that we are living in as we meet our goals. So it's becoming a very important topic to relook at the way we do business, the way we operate in the different countries and the different organizations. Are we living in such a way that we are doing it without compromising future generations to meet their own needs? So that is the concept of sustainable development. So we're talking about a balanced approach in terms of integrating environmental stewardship, social responsibility, as well as economic development. Whereas in the past, the focus was really economic development. Let's develop, let's improve people's lives. But we are now saying you need to do it in such a way that you're being a good steward of the environment. You're also being socially responsible. So there could be a lot of examples. I don't think we'll have time to go, but yeah, so maybe let's talk about some of the key areas where we could be meeting our needs at the expense of future generations. This is where maybe we are doing things that degrade the environment. So we are polluting the environment. We are not reclaiming the environment. We are cutting down trees and we're not replacing those trees, and that could lead to desertification. These are some of the examples that we're doing. Let's say you're in a company that is in forestry and you're cutting down trees, but not replacing those trees. What it means is that the future is going to be much harder because of what you've caused in the environment. So just an example that I could just use to just illustrate this particular point. So let's say you're a Zimbabwean company and you use plastic packaging, right? Then an internal sustainability audit recommends that you need to use a biodegradable alternative. But this would bring in costs. So it's going to cost you 15% more to use that alternative. So when you look at this example, we are saying, how do you approach decision-making when faced with this simple example? So on one end, you want to achieve profitability. So you're saying, I don't want to increase my costs. So if profitability was the only factor, this would be a better idea because it's increasing your cost and obviously affecting profitability. But on the other side, we're saying, is economic stewardship the only thing that you need to consider? Moving to this would be a big win on the environment because you're now using better material. So it could be a win on the environment, but obviously it could be a cost on the economic side. So when you're talking about sustainability, it's now where's the trade-off? How can we achieve a win-win? We're making a profit, but we're also being good steward of the environment, also being socially responsible. So that is the conversation around sustainability, where if the focus is on cutting costs, but are we cutting costs at the expense of the environment, at the expense of social justice and things like that? That should not be the case. So that brings us to 3 pillars of sustainability, which is number 1. I think in the past, we're talking about profitability as one of the main pillars, but some of you now know that I think the concept, this one is best explained when you're talking about triple bottom line approach. So we're looking at 3 profits for an entity. So it's not just one, the economic profit. So you're talking about economic profit, environmental profit, and social profit. All these 3 are important. And the zone that we need to be operating in is this zone here, right? This is the most important zone that we need to operate, where it's a tick on economic, it's also a tick on the environment, it's also a tick on social. So it's not about achieving economic at the expense of environment or achieving economic at the expense of social, but it's about achieving all these 3. You still need to deliver value to shareholders and other stakeholders, but you also need to deliver value to the environment as well as to the communities and the societies that we are all in. So just helping us understand sustainability is about how can organizations achieve these three profits, as it were, as they move forward. That is the cornerstone and the essence of what you're trying to achieve in sustainability. So that's very, very important thing. Just apologies. Okay, sorry about that. Let me just go back to my slide. All right. So that's what we are currently talking about in terms of sustainability. Just give me a second so that I don't get any disturbances. All right, apologies for that. Just wanted to make sure that we are not getting disturbed. Right. So now that you've got a good understanding of what is sustainability, now let's talk about therefore what is sustainability reporting, which is really the main thing that we want to cover today. So when you're talking about sustainability reporting, we're talking about measuring, disclosing, and being accountable to internal and external stakeholders for the organizational performance towards the goal of sustainable development. So one of the key things is that if it's not being reported, which means no one is worried about that. So the rise of sustainability reporting is that let's now also report in a way that shows how we are performing around those three profits that I spoke about: environmental, social, as well as economic. So sustainability reporting therefore helps us enhance transparency and build trust with stakeholders. Stakeholders are able to look at the business and say, are we doing our business in such a way that is sustainable? And also it shows that we are committed to long-term value creation. When the biggest investors globally, in Zimbabwe and globally, you'd find I'll give you an example of institutional investors, which are like your pension funds. So when a pension fund wants to invest in your organization, or when it's looking at, is this a good company to invest in? They're obviously concerned because remember they're collecting pension on an employee who is young, who is 25 years old today, but that employee is contributing their pension and they want to enjoy that pension when they're 65. So if you're a manager, an investment manager in a pension fund, and you're looking at companies to invest in, what you're looking at is this company's operation sustainable for the next 40 years so that when this pensioner wants their money, they're able to get that return. So that's why long-term value creation becomes integral part of sustainability. Also, investors and regulatory demands, I think regulation is increasing and also investor scrutiny is increasing, but also benchmarking process with what's happening everywhere else. So that becomes obviously the key driver. So when you're talking about sustainability, I would have obviously covered this when I was discussing. You're looking at reporting, looking at what are the key environmental metrics. Remember, initially our financial statements were focused on profitability, right? So we're looking at the profit. We're looking at the surplus and deficit. What is my total assets? What is my liabilities? What is my gearing? All those financial indicators. But now we are bringing in sustainability indicators to the whole thing. And on sustainability reporting, we're now saying, what are the environmental metrics? How are you doing? So you're talking about things like greenhouse gas emissions. You're talking about water usage, energy efficiency, waste reduction. You go to social metrics, labor practices. How are you responding to the needs of different groups? It could be needs of women in the workplace. It could be needs of even avoiding things like child labor. You're talking about those aspects about different groups, those disability in the workplace. You're also talking about health and safety for the employees, diversity, also community engagement. Are you a good community citizen, as it were. Then we also talk about governance matrix. So we're talking about boards, we're talking about ethics in the workplace, issues to do with corruption, issues to do with executive pay, which is responsible. So those are some of the key things that become key areas of focus on sustainability reporting. So in terms of the biggest or the major reporting frameworks that we have, so you'd find that because of the need to do sustainability reporting, we saw the emergence of different frameworks that were used in different parts of the world. So you've got the Global Reporting Initiative, which is probably one of the biggest, most common that were being used before the IFRS sustainability standards. It's very used so much in Africa, in South Africa, particularly requirement of GSE listed entities, and then Zimbabwe adopted the same. So it's part of the requirements in Zimbabwe for listed entities to use the Global Reporting Initiative when they're doing their sustainability reports. We also then had the SASB board, which was which I'll talk later on, that it's been incorporated by the IFRS board. So the Sustainability Accounting Standards Board. We also had a task force on climate-related financial disclosures, and then also we've got the integrated reporting framework. Again, South Africa is very big on integrated reporting. Some of you know with the King reports, it's big on that. Then we definitely, of course, you have the IFRS sustainability standards, which is obviously a recent thing. So I'll talk more into the ISSB and then the IFRS sustainability standards. So the idea here was to bring about convergence, likely because if you look at different standards, we're beginning to emerge for different jurisdictions. So, and the problem with that is obviously is that people are looking at the same subject differently. So comparability and consistency became a big issue. That's why then this board was set up to be able to be global body for sustainability standard, leveraging already on the IFRS standards that we currently do, so that it becomes quick to be adopted and accepted. So focus on information. It's still focused on information, sustainability information that is still financially material and useful to investors. So the major focus is still on information useful for decision making for resource providers. And then we're looking at standards that are compatible with that. So the ISSB therefore weighted and incorporated within itself the SASB standards as well as the TCFD standards. So they now form part of the package within the ISSB. But it then obviously went on and developed two, which were issued about 2020, some few years ago, and with effective dates of 1 January 2024, which was last year. So we've got IFRS 1, which is general requirements for disclosure of sustainability-related financial information, and IFRS 2, which is climate-related disclosures, which is essentially aligned with the TCFD. So what I'm going to do now is just to do a run through of the two standards, just for you to have a good appreciation of the two standards. Obviously, there's still a lot. The standards are it's new. There's a lot of information. What I'm trying to do is just to give you a good overview and understanding of what is required. And so that as you then go deeper into the standard, you've got an appreciation framework in terms of applying the standard. So let's start with IFRS S1. So if you go to the IFRS.org website, you now see two tabs. So you've got your IFRS accounting standards, where we have your normal accounting standard, and then you've got your IFRS sustainability standards. So it's in the same place. IFRS.org, you're able to see all the two standards there. Right. So let's look at IFRS S1. So in terms of the scope, we are talking about, this is essentially like your IS1, essentially, or to a certain extent, the conceptual framework, because then it provides a base in terms of how you need to report on sustainability related information. So it's setting out general requirements to disclose sustainability related risks and opportunities, which are expected or could be reasonably expected to affect your cash flows, access to financial capital over the short and medium and long term. So what you're looking at is, as an entity, you must be aware of what are the sustainability related risks that you're currently facing, but at the same time, what are the sustainability-related opportunities that are there? And you're talking about risks and opportunities in terms of how they affect your cash flows, access to finance, and cost of capital over the short term, medium term, and long term. So what we are saying here is we are looking at the risks and opportunities that are essentially material to the entity's cash flows and access to finance. So one of the key things that you're beginning to see, particularly on access to finance, is that lenders are beginning to be more and more requiring entities in particular, for example, in terms of project funding, they're going to be funding projects. They're looking at sustainability of that project in terms of how is this a sustainable project, as it were, including cost of capital. If you're looking, if you're doing projects that are not considered that they are sustainable, it means you're probably likely, your cost of capital is likely going to be much, much higher. So the key principle is we're looking at information that is obviously useful to investors as well as other capital providers, which is really the base of IFRS, where it's looking at information useful for decision making to resource providers. So we are looking at sustainability related risk and opportunities, and we disclose that on three key aspects. So four core concepts, right? So we've got number one. The first thing is, so this is setting a foundation. So you'll see when you look at the climate-related disclosures, it still follows the same format. So this is just laying a global sort of foundation around how you do it. So the 4-pillar structure, which is aligned to the TCFD, is number one, governance. So the starting point is, do you have governance structures that are looking at sustainability issues? Very important aspect in terms of governance structures. So for example, you're looking at how is the board seized with sustainability issues? Is there a specific board committee that is looking at sustainability, right? So the encouragement here would be actually to have a specific board committee that is looking at ESG issues. Some people call it the ESG committee. Very important part of governance structures. Are these, from a management point of view, executive, is there someone responsible for sustainability within the executive structure? Is there an executive structure that is looking at sustainability issues? Because obviously, if you've got a board committee, it must flow from the executive side to the board committee and ultimately to the board. If it's and how are the issues being discussed? Are they forming part of the permanent agenda of the board to deal with this? So this is some of the key things that on governance you need to look at when it comes to sustainability. Then strategy, obviously, sustainable issues is going to affect the company's business model. So how is the business model, financial planning, and all other planning incorporating issues to do with sustainability? So our strategy, how is it aligned to be able to take into account the sustainability risk as well as the sustainability opportunities that are being presented? Then the third pillar that you also need to look at is risk management. Do we have processes used to identify, to assess, as well as to manage the key sustainability risks? So risk management becomes an integral part of what you need to be able to report on. Then last but very important is metrics and targets. So ultimately, on each risk or on each opportunity, on the different aspects, you must be able to say, what are the key metrics that I'm going to be reporting on? And these metrics differ from industry to industry, from company to company, because it's not a one-size-fits-all. So one of the things that you must therefore be able to do is to identify what are the key metrics that we have. Now, the good thing with this is that some of the metrics are not new. We are already doing some of them. For example, when you go to governance, most entities already track board meetings, frequency of board meetings, board attendances, the different committees, and those are the things that fall into your metrics, right? Particularly when you're talking about the pillar on governance. But it's going to be much, much more because of how robust sustainability has become. Now, very important, which is something that people overlook significantly, is that whilst we're talking about two standards, so this is where I want to emphasize, so I just extracted this exactly as it is from the standard. So whilst we're talking about two standards, some people would then therefore say, also it's quite easy, just implementing two standards. But the paragraph in S1 says, in addition to the IFRS sustainability disclosure standard, it says an entity, right? It says an entity shall refer to and consider the applicability of disclosure topics in the SASB standards. So an entity might conclude the disclosure topics are not applicable. So what you need to do is, what S1 is saying is, you're being referred to a whole body of SASB standards. So what that essentially means is that you're not just implementing S1, you're also implementing the SASB standard. So what you need to look at is, you then go to the list of SASB standards and look at because they're then per industry, and look for your industry. And if you're able to locate your industry there, you then download the disclosures that are specific to your industry. And then the part of what you need to implement when implementing IFRS S1. So this one is very important because you are now bringing a SASB standard over and above just this IFRS standard. Remember, earlier I said that the SASB standards were incorporated into the ISSB. So that means that you're now applying the SASB standards, and this standard is referring you. And I was discussing with the group, and they're saying, when it says an entity shall refer to, it's not saying an entity may. This is shall, which means it's a requirement to refer to those standards and then consider their applicability. Now, it's possible that you'd find that those standards are not applicable by not finding your industry, because the industries there are not exhaustive. So you could be in an industry and you look and you can't find your industry there. In that case, you could come to a conclusion that these standards are not applicable to me. So very important, there is a shall here. When you go on the B, it then says an entity may. Now, B is now optional because of the use of the word may, refer to and consider, right? So here talking about the guidance on biodiversity related disclosures, and also for water related disclosures. But this one is optional. And also most recent pronouncement of other standard setting bodies. This is where you would consider standards like your GRI, which I spoke to earlier on. They're doing this because, remember, they've just issued 2 standards, of which they're not enough to cover all the sustainability topics that you need to report on. So just let me spend time and help people understand how the SASB standards are coming in, which are required for you to consider, but then you've got the other standards which are not required for you to consider. Then quickly, we look at IFRS S2, just an overview of IFRS S2 climate-related disclosures. Again, so what you'd find that whilst the S1 is general, it's not talking to any specific type of risk or sustainability area. The expectation is now the other standards will now cover the specific topics. So if you go to the conceptual framework, for example, you go to the conceptual framework and you go to IS1 or even IPSAS 1, they just give you like a broad guideline, right? For example, it tells you what is an asset, but it doesn't tell you what type of asset it is, because then you have to go to the specific standard. It tells you how you need to present your statement of financial performance and the likes, but doesn't tell you how you come up with the revenue. What is the recognition criteria for revenue? So it's almost like the same. So what we've done here is you're looking at the 4 key areas: your governance, your strategy, your risk, as well as your matrix and all, but it's not going to be specific to any sort of sustainability area. So now when it comes to IFRS S2, this standard is now specific to climate-related disclosures, right? But it follows exactly the same thing. Now, it's now being more specific, where it's talking about climate-related disclosures, climate-related risk and opportunities. Remember earlier, just saying risk, sustainability, risk and opportunities. But in this case, you're not talking about climate-related risk and opportunities. So that's the focus of this particular standard. So it's really building on IFRS S1, but focusing more on climate-related disclosures. So 2 things that you need to look at when you're talking about climate-related risk. You're talking about, number 1, physical risks. So you're talking about risk from climate change impact, like extreme weather, rising temperatures, floods, drought, rising sea level. It's very hard to get a company which says we have not been affected by climate change. And you could talk about this as acute risks, which are short-term event-driven. Like, for example, there's been a wildfire, there's been a cyclone. So they're acute, they're short-term, but you could also talk about chronic risks, like long-term changes. For example, I'm talking about desertification. So these are some of the longer-term changes that are not as acute. Then we talk about transitional risks, which are risks that are rising from a shift into a low-carbon economy. So these are more like risks that are coming as a result of countries trying to adopt, or the market trying to adopt to be more sustainable. So you could talk about regulatory risks, where government can begin to impose, taxes and things like that, or requirements for entities to be more aligned to sustainability. You're talking about marketplace, where the market is becoming more sensitive to sustainability in terms of how you do business. This is, for example, if something comes out in the social media that you are doing this, that there's unequal pay between men and women, people will boycott the product. So this is some of the risks that are there. Technology shifts as well as reputational risks. These are transition risks. Then in terms of opportunity, massive opportunities as it comes to climate change and climate-related issues, resource efficiency. We are moving, there's an opportunity for resource efficiency. We can also introduce new products. We have seen the rise of electric vehicles, access to green finance. So if we are financially responsible, sustainably responsible, we can actually access loans. This could be some of the opportunities that are there, right? Now, so the core disclosures again I'm now going to focus the same framework, governance, strategy, risk management, and metrics, but now focusing on what? Now focusing on climate, right? So I'm going to say on governance, what are the governance structures that are there that are looking at climate-related risks and opportunities? Now, that doesn't mean you have a separate committee that looks at climate, but it's now saying if we have a governance structure, for example, if we have that ESG committee, are they dealing as well with climate-related risk and what? In disclosure. Is climate-related risk and opportunities part and part of our strategy? Same thing with risk management, and therefore also the metrics and the targets that we need to have related to this. So that becomes part of the climate-related risk and opportunities. Now, this is just a quick overview in terms of the standard. It's the standard itself. I've just done a rush through of the standard just to give you some kind of a base to work with. But our invitation from LChat Business School is that we're there to support you in terms of capacity building. This is a new area. So we've got a team where we can do a tailored training to equip your teams with knowledge. We can start from awareness, but even go deeper into these issues. So we're there to support you in terms of capacity buildings for your team. We're also there to help you build a strategy around sustainability, because like I said, it doesn't start on reporting. You need to start from the onset. We're also there to help you with implementing the new standards that are currently in issue and implement, including materiality assessments, but also just making sure that one of the things with some of the entities we've interacted with is that they start looking at things at reporting and realize, but we don't have a way in which we can measure, or we are taking data related to our carbon emissions. We are not tracking our energy efficiency and things. So you must go back, and just like you've got an accounting package where you are recording transactions as they happen, you need to have a system and processes which allows you to collect data as and when things happen, so that when you then report, you've got enough data already that you've reported on, and we can help you establish such systems and processes. So that's sort of, and Uma is going to maybe expand a little bit more on this, but we are there as LChat to be able to support you. Otherwise, thank you very much. Emmanuel, back to you.
Okay, thank you very much, Alice, for that comprehensive walkthrough on the IFRS S1 and S2 on sustainability and what they mean to our reporting landscape. Also, by connecting the materiality assessments as well to future cash flows and showing how climate metrics translate into boardroom action. You have painted a picture of the opportunities and risks that every finance leader must now manage. Now we are moving on to our second speaker, I'll leave the time over to Wilma.
Thank you, Emmanuel. So my name is Wilma Kombe. I'm the head of the Training and Learning Media Division at LTD Business School. To send a link on the WhatsApp group, may you all click that link for now. We would just want to find out from you, are you ready to have these discussions on how to start this journey on sustainability? So please click the link and fill in the information. Here at LTD, we want to support you as you start this journey. Kindly click the link as we wait to continue. Thank you. I see people are completing the link. So just basically asking your details, where you're from, your entity, and just finding out if you'd be interested in having these discussions first preliminary, just to find out where you are and how then we start the process on sustainability. Then also just to find out if you would be interested in an organized workshop on sustainability, as alluded by Alice earlier on, that would like to organize a workshop that would then delve deeper into these standards. Then you can start your journey. So as you complete the link, I just want to take you through about LTD Business School, who we are, where we're going, and where we're coming from. So under LTD Business School, we've got the Professional Education Division, we've got the Training and Learning Media Division, then we've got the LTD Chartered Accountants Division. So we've got 3 divisions under LTD Business School. So under Professional Education, we've got the Public Sector Professional Accountant Program, abbreviated PSPAZ, then the Association of Chartered Certified Accountants, abbreviated ACCA. Then under Training and Learning Media, that's where we do the organized workshops, then also do in-house trainings, then also the learning media. Then under LTD Chartered Accountants, we have the Professional Services and Talent Outsourcing Division. So under Public Sector Professional Accountant Program, this is a 3-year program. So it's got your 3 levels. You start in level 1, you complete, you move on to level 2, then level 3, then you become a full member of PSPAZ. So this program is done in collaboration with ICAS, and LTD Business School is the sole tuition provider for this program. So this program is structured for 2 semesters per year. You've got your intake in January, then you start your classes around February, you write exams in June, then you break for the semester, then come back again in July, then you finish the 2nd semester around November, then you write your ICAS board exam in December. So we've got Harare and Bulawayo campus to cater for also those in the southern region. So you can do your classes in Harare or in Bulawayo, depending on your location. So for the 2026 applications, these open in early September, actually on the 1st of September. If you would be interested in this program, feel free to get in touch with us. We'll also be sharing on our social media pages when the application process is an online process. You upload all your documents online, then we process your application, then you proceed to register. So if you're being funded by your employer, we'll then require a letter of consent that the employer is free to go ahead and apply and register without that letter of consent. Then under the ACCA skills, and you've got 6 modules there. Then the strategic professional, which has got 4 modules. Then over and above, you need some practical experience requirement, which is your 36 months or 3 years experience whilst doing the ACCA program for you to get the full qualification. And also during this program for ACCA, we're saying there's an honors degree in professional accountancy with the University of London. So instead of you saying maybe with your siblings, your nephews, your nieces, after A-level they want to enroll into university, why not then join ACCA first? Then during those 4 years, they are able also to attain a degree during the process, and at the end, they get the full qualification of an ACCA member. Then I want to talk about the approach that we're going to use as EBS. So our academic calendar will consist of 2 exam sittings, which is June and December only for ACCA. Then also these courses will be aligned to the ACCA exam windows. Also be having regular assessments and progress tracking, and also one-on-one academic support and mentorship through this program. So what are we saying about what's special about our ACCA? So we're saying we're going to have an integrated practical training through our Chartered Accountants division. So we're saying once a student is enrolled with EBS to do the ACCA, we're saying along the way, they can get to have the experience they also need. So we'll be placing them through different work opportunities, through firms. They'll be doing some reconciliations, etc. throughout the 3 years that they are with EBS. So we are saying at the end of the qualification, they should have gained experience, both practical and academic experience. And we are guaranteeing that they'll have some opportunities to work throughout the time that they are with EBS. So our classes will be open in February 2026, which is the first enrollment. So please get in touch with us. If you know anyone who's interested, who's currently doing writing their A-level, for A-level students to start next year in February 2026. So what we're also saying for this timetable now, if you've got the people who are doing on placements, we're saying they can come through and do the lectures online in the evenings, but during the day, it becomes a full-time program. Your Monday to Thursday, full day at our campus in Harare. So that is for ACCA. So that's under the professional education. Then we move on to our trainings division. So for the trainings division, we've got the organized workshops that we do. So we've done for IFRS implementation, your financial statements preparation, asset management, financial instruments, leases, budgeting, IFRS and sustainability standards. Then over and above, also do Microsoft Excel, your data analytics, AI, and Excel for financial modeling and report writing. Then we've got in-house trainings. For in-house trainings, we're saying these are tailor-made. So for example, an entity can then approach us, maybe be it ZESA, that they want some assistance to do their financial statements. That is what we call in-house trainings. We come to them, then we train on them. Is it a standard? For example, we're dealing with sustainability. We come to you, we really delve deep into the standard pertaining your entity. That's under in-house trainings. So speaking of the organized workshops, we've got an upcoming workshop on practical Microsoft Excel, AI, and data analytics. So in this workshop, we're saying usually accountants deal more with Excel's figures, etc. So we're saying come to this workshop, we'll deal with it from level 1, from the data capturing, the Microsoft Excel functions, the shortcuts, we'll do your charts, your dashboards, also the pivot tables, and then also data visualization. Then over and above, we're going to explain how to use AI in your reporting to make it easier and as seamless as possible. So this workshop is happening in Kwekwe from the 26th to the 29th of August, and we've got different packages for this workshop. You can choose your conference only, or you can choose conference and a laptop. So we're saying the laptop is a prerequisite because this is a practical session. So we need you to be actually doing the job during this workshop. So if you don't have a laptop, we can then provide you a laptop if you choose the package with a laptop. Then there's also a full package, which includes the accommodation, the conference, and the laptop, which is going for 1.4. We also are available for these prices. So for those who are interested, please register with us. Our WhatsApp number, which is also available for calls, 0781 591 780. Or you can email us at marketing@elchat.com, or even visit our website. The flyers and information are readily available for you. Then we go to the division, which is the ELCHAT Chartered Accountants, abbreviated ECA. So in this division, with the professional services and talent outsourcing. So under professional services, this is where we do your audit and assurance, your accounting, financial reporting, your tax, corporate finance, your ESG and advisory services, and especially do with the sustainability reporting, which is the norm and it's the future and it's not going away. We also do training and thought leadership. So if you require any consulting services in this division, we are also saying we've got the capacity to come and assist you. You can consult with us. Then for the talent outsourcing part, we are saying, be it your busy period or you want to quickly fill in essential positions, we've got the capacity as well. The access to job-ready professionals. These are people who are available for immediate project-based projects. Then also budget efficiency. We are saying they're not coming at a high cost, so you have to optimize your hiring process while also controlling the costs. We've got flexible staffing solutions, which is scalable workforce, and also just to changing project needs or any businesses that can change. Then we've got expertise across all disciplines, so be it in audit, financial analysis, and risk management. We've got all that capacity. Then it's just reduced recruitment time for you. Just call to ELCHAT and we've got the right people to refer to you. Then over and above, enhanced focus on core activities. Your internal team could be focused on anything else, then our people can come and assist you when then in need for financial tasks. So this is under the talent outsourcing, under Chartered Accountants. Then we've got the learning media division. So under learning media, we're saying this is where we do our free webinars. For example, the webinar we're currently in. Then we've got free ebooks that we also do. We've got blogs, we've got YouTube videos. So please subscribe on all our pages. We are on all the social media. Then under learning media, again, we've got the digital tablet, which is preloaded with standards. For example, if you want the hard copy, we've got your IFRS standards, your financial reporting modules. You can get this as soft copy and flash drives, your laptops, your tablet, and also just general standards that we have. We've got a fully functional bookstore that is there to sustain your needs that you might want in issues to do with IFRS or anything to do with financial reporting and accounting. Then you can visit us either physically at our offices. We're by 50 Angwa Street, which is Angwa City Building, and we're right on 8th floor. Or you can call us on 0781 591 780, which is also available on WhatsApp, or our landline 086 4430 8053, or visit our website www.lchat.com, or on our digital handles. We're on Facebook, LinkedIn, YouTube. We've got a WhatsApp e-channel, Instagram account, and also TikTok. All our handles are written LChat Business School. So for all this information and over and above, feel free to contact us, and I hope to see you to our Microsoft Excel training. Thank you, and over to you, Emmanuel.
Thank you, Ma, for the presentation. We are now moving on to our last section of our webinar today. Is there anyone who would like to ask a question?
Sorry, I joined late. I want to understand, is there a certificate for IFRS, the sustainability, the one which was being presented by Mr. The first presenter? Sorry.
Because I think we normally don't give certificates of attendance for webinars, but
No,
if
no.
you would like,
Hello, sir.
yeah.
No, I just want, is there a course?
Oh yes, yes.
Is there a course
We're coming back.
not
We are
for this
developing.
time?
Okay. No, we are developing a short course on sustainability. I think because we already have your details, it's coming out in September. So I definitely know you've got a short course that we are currently working on. So that's going to be coming soon. Thank you for that question.
Thank you so much.
Okay, I see there's another question in the chat which said, do you also help studying for CPA Zimbabwe examinations?
And currently we don't offer this facility, but we were looking for it into it in the future. So I think once we are onboarded, then we'll then get in touch with you.
Morning, Emmanuel. I have a question for Elise. One of his initial presentations was talking about the assessment of the cost of capital as one of the factors that people will look at it all. And then I just want to find out, how applicable is this in the Zimbabwe environment currently, considering that we are operating in a speculative environment, which is literally in overdrive. So, and also knowing that cost of capital has a lot of factors that feed into it. So how really can that be done in the current Zimbabwean environment?
Okay, thank you very much. I think Zimbabwe environment is not as unstable, particularly because you're using the US dollar. So when you're looking at cost of capital, it's going to be your cost of equity as well as your cost of debt. So when you look at where money is coming from, particularly when you look at some of the lines of credit that banks are beginning to raise, they've got a huge element around sustainability. They want to know the sustainability practices. What is the money going to be used for? So what it means is if your operations are against that whole movement of sustainability, it means that you're not able to access some of the funding that is coming. And therefore, that pushes you to the edge where you're now starting to maybe raise money at a much, much higher rate when it comes to, this is when it comes to debt. It's the same thing that we're also beginning to see with investors, particularly when you're beginning to look at trying to raise funding, financing. Issues of sustainability becomes big issues. I know from an equity side, it's not yet that, largely because our market has not really been very active in capital raising. But I think it's a trend that going forward is expected to see that no one is going to be willing to invest in projects that are not sustainability certified, and entities that have got, for example, financial statements where they've got sustainability information and it's been assured, are likely to be able to raise money, whether debt or equity, at a much lower cost than entities that are not. Yeah, thank you.
Thank you for answering that. I hope your question was answered.
I'm good.
Okay, we have another question. Good day. Do you offer study or study materials for CIMA students?
All right, thank you, Emmanuel. So yes, we've got a shipment that's arriving sometime in September. So once it is arrived, together with the ACCA material, then we'll take your details, Mr. Emmanuel Moyo. Then we'll get in touch with you. Thank you.
If no any other questions, just a reminder, we will share the slides as well as the recording. And thank you again for attending on this webinar. This is the end of our webinar. Thank you and have a good day.
Thank you.